Today, crypto miner Core Scientific cuts 10% of jobs. Authorities in the Netherlands arrest a Tornado Cash developer. And the world's largest asset manager is launching a Bitcoin trust. Is Wall Street ready to go all in on crypto? Welcome to CNBC's Crypto World. I'm Kate Rooney. Digital asset prices mixed as we head into the weekend. By noon Eastern, Bitcoin fell to $23,000, Ether traded around $1,800, and Polygon dropped to 92 cents. In the past 7 days, Bitcoin has jumped 4.5%, and Ether has rallied 14% as a series of economic data put out this week shows inflation may finally be slowing. All right, on to the top stories. First, crypto mining company Core Scientific is cutting 10% of its workforce. The company made that announcement after reporting second quarter results, which included an $840 million loss due to plummeting asset values. Core Scientific CEO Mike Levitt said the cuts wouldn't be coming from its data centers, and despite those cuts, Levitt did say he expects the majority of Core Scientific's growth to happen in the remainder of 2022. Next, Dutch authorities just arrested a Tornado Cash developer. The Financial Information and Investigation Service arrested an unnamed 29-year-old in Amsterdam on Wednesday, claiming he helped launder money through the protocol. The arrest came less than a week after the U.S. sanctioned Tornado Cash for its involvement in several crypto hacks. Finally, UK asset manager Aberdeen just bought a stake in crypto exchange Archax. The crypto exchange is the first to be regulated by the UK, and Aberdeen is now the largest outside shareholder of that business. In a statement, Aberdeen CEO Stephen Bird said Archax is one of the most promising UK players in this next expected high-growth area of finance. Aberdeen manages about $600 million in assets and expects its investors to use Archax to buy digital assets. That news from Aberdeen comes on the heels of BlackRock announcing just yesterday that it would launch a new private Bitcoin trust for its institutional clients. Crypto World's Jordan Smith spoke to Santiago Portela, CEO of Fitchin, about BlackRock's trust and whether Wall Street is gearing up to go all in on crypto.
Okay, so Santiago, we had a lot of news from BlackRock in the past week regarding crypto. This Bitcoin trust is just the latest. What does it mean for crypto that the world's largest asset manager is getting involved so heavily in the space?
I think it's great news. It validates crypto and Bitcoin as an asset class. So I think that's quite important. But it's also, it opens up the opportunity of a lot of investors, institutional investors, to get into crypto. So that is also not only validates the asset class, but also allows a lot of additional funds to come in.
BlackRock isn't the only asset management firm that's getting into crypto right now. We had Aberdeen in the UK. It took a stake in Archax. Fidelity wants to let its customers invest their 401ks in crypto. I mean, do you think we're about to see a wave of Wall Street crypto adoption as we come out of crypto winter?
I'm not sure about that. It's still a niche or small asset class, but definitely there's a lot of room for growth. And having BlackRock, the biggest asset manager, coming in also helps into that wave of investors getting their grasp on it. Here we're discussing of maybe a layer one, we can call it a layer one asset in crypto. With that wave there you're asking about, it might go to layer two, layer three of Ethereum or some other assets in crypto. And that's kind of when we were going to see that big wave.
BlackRock's been pretty focused on ESG investing recently, and Bitcoin is often criticized for its energy use. Do you think that BlackRock's choice to go with Bitcoin at this layer one technology over something like proof of stake or even Ethereum that will be proof of stake eventually is the right choice? I mean, Ethereum's been outperforming Bitcoin in recent weeks.
There's a big difference between the two of them, right? As I called it before, Bitcoin is probably a layer one asset. It's the asset for when you think about crypto. It's the first one. It's kind of the asset by choice as the first one to get into this market. So it's in a way it's the right choice for them to go there and start from there. But if we're talking about possibilities of growth of value generation, probably if you go down the road into Ethereum or some other assets behind it, you will have bigger betas or bigger opportunities of value generation from there. But well, you can't go to the inside the rabbit hole before actually knowing the product and getting into crypto and the first layer of assets.
Yeah, I want to talk about risks for a second, particularly around the idea of regulation. I mean, the UN Trade Conference asked countries to ban banks from engaging in crypto. I mean, here in the US, Elizabeth Warren and a few other senators were asking the controller of the currency to rescind some past guidance that banks could get involved in crypto. I mean, do you think that this puts BlackRock and other asset managers at risk at all? Or do you think that this is just a matter of once we get the regulatory clarity, it will be full steam ahead?
I think that it helps a lot or one of the reasons probably that they went into Bitcoin and not into some other assets is right that it's what is the regulation for these assets, and for the last couple of years, this discussion on Bitcoin has been one of the biggest ones. What it is it what type of asset is it? Is it a commodity? Is it a currency? What it is, and it seems for now it's pretty clear that it's from legal perspective there's no issues there, and it's not a security, but well, this is changing all the time, and as you said, there's a lot of discussion of what it is and how to treat it, and I think that everyone is looking at that. Until that is not very clear, the amount of investors will be more limited. But again, this is a huge market and it's growing a lot, and everyone's still maybe not a big share of their assets, but they want to have a little bit of it and see where that takes them. I think that what we see with BlackRock here is not just distrust. And again, it's, as you said, it's not the first time that this is brought into to investors. You have Pantera having an open fund like similar to what BlackRock is doing. You have also GBTC, which is closed and some discounts. So there are some ways of getting into Bitcoin for investors. The big difference here is the brand of BlackRock, and the other thing is BlackRock. It's not just doing this fund. A week ago, it was Aladdin, and the partnership with Coinbase on how to give access to their investors into cryptocurrencies. So I think it's much broader than this fund alone, and there's a lot to be seen.
Do you think that we could see more of those types of partnerships for traditional, Wall Street firms, where they turn to crypto platforms that know this business, they know the industry, and can help them navigate it?
I think so. It makes sense, right? You have specific expertise in exchanges such as Coinbase, with banks having a different expertise. So having that merge or that partnerships, they make total sense.
Okay, that's all for this week, but be sure to come back on Monday for a lot more. Have a great weekend. We'll see you then.